Hello and welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report for Tuesday, October 4th. You know, right now you can just sort of feel the market holding its breath right now, just trying to figure out what's going to happen next. There's so much risk that's out there. But what's making everything worse is these events here. This is where Fed speakers are grabbing a microphone and basically interjecting more risk into the market. So that alone, plus, of course, we have the Friday jobs report, which is right back here. So there's a lot of reasons why we're seeing somewhat nervous, jerky price action. And quite honestly, I'm seeing a lot of traders having a very difficult time trying to figure out which way the market is going on a day-to-day basis. One day it seems to have a positive bias to it. The next day there's a negative bias to it and the world's coming to an end. And then the next day the dip is bought again. And so we're just sort of consolidating in this very, very small range right now. And actually, this has sort of been the MO for the market since around the July timeframe. Really not much has changed. However, you can just sort of sense this anticipation that we're going to see actual price movement and trading again here very, very soon. So how can we stay on the right side of the tape in this very nervous market? Well, this is where I go back to using multiple time frames and basically staying on the right side of the trend. The right side of the trend is important. Imagine if you had a river here going with a certain current to it, right? You'd want to be on the side of the trade that was with the flow of the current and not get caught up in these sort of little eddy pools that we tend to get pulled into, which actually show a false reverse current to this, but ultimately get swamped by the major trend that's happening. So I am a big believer in using fractal time frames. Really, fractal means that each smaller time frame is just a smaller representation of what's happening at the larger time frame. Let me show you what I'm talking about here. So by placing charts in different time frames, so for example, what I'm showing here is the monthly on the left, we've got the weekly chart here, and then of course the daily chart here, and we're just looking at the NQ or the NASDAQ futures contract. Now it's not hard to see that we have an overall bias to the upside. The dips have been bought like forever, and that's being shown by the monthly chart. But of course we can't, the monthly chart's really not actionable. We really can't take signals off of the monthly chart. We can start to perhaps take signals off of the weekly chart as they show the patterns within the patterns. So what looks like just a mess here is actually showing some pretty interesting swing-based price action inside of that zone. So this chart too is also showing, at least recently since the beginning of the year, an uptrend here. But the one thing that we do have from this is an understanding that through this indicator shows the linearity of the trend, and this is right around the limits of where we'd expect to see some type of sideways to perhaps downward reaction to this. So from this linear trend, what I would expect to see is more sideways volatility. So that sets kind of the overall tone for what we're expecting to see in the short term, is perhaps more of this, more volatility on a price-based behavior, right? Just and more just sideways trendless movement until this chart gets a chance to catch its breath. And then we'll see which way the chart wants to trend from here based on a break of that range. So how would you go about using something like this to affect your daily trading, especially intraday? Well, for that, we have actually a couple more charts that I want to bring along, because even these are fairly large as it relates to intraday trading. So I want you to focus on the two charts on the left here. The leftmost chart is the daily chart of the NQ, which is similar to what we just saw on the other chart on the right-hand side. So it's the same thing here. And then inside of that, actually have a fairly large tick chart here. So each candle represents 6,875 transactions. So where does that number come from? Well, it's basically 25 times the size of my signal chart that I use to take actual signals from on the NQ intraday. Now, the point that I bring this up for is having that chart be 25 times, so I call this a 25x chart, 25 times the chart that I'm actually taking signals from, makes it much easier for me to see the actual trend of what's going on. And again, remember that analogy of that river. I just want to trade in the direction of whatever direction this chart is going in. And notice the big swings that we're seeing here, up and down and up and down here. So staying on the right side of those, we're not seeing any that are just going straight sideways here, are we? So staying on the right side of that trend is very, very important towards understanding which direction that we should be biasing our trading to any one particular day. I can also use this indicator down at the bottom here to look for long entries, short entries, and potential long entries again, perhaps tomorrow if we see some more upside action here. So today we got a fairly early downward bias and a sell signal based on that. So how did that affect today's trading? Okay, so here's my 275 tick chart on the NQ, and you can see that after an early rally up, and this is the opening range which I avoid, the first move after that is to the downside, and it actually takes out a prior swing low. Sets up with a lower high, and the game is really on at that point to the downside. So after that, you can see how everything is just a series of lower highs and lower lows, lower highs and lower lows throughout the day. Little bit of closing action into the last few minutes of the market, right? Which is pretty common to see. Shorts cover at the end of the day, things like that. But we'll have to go through the same thing tomorrow morning to determine our early read based on our anchor charts, the larger time frame charts, to set that anchor for that direction of the trend that we should be trading in the direction of. This is going to make it so much easier to stay on the right side of the price and not get caught, backed up against the wall by getting in front of the freight train that's about to roll us over. Now, you can use these same techniques whether or not you're swing trading options on more of a monthly basis, or whether you're using intraday signals to set up shorter term option signals. It really doesn't matter. The same principles apply regardless of the time frame. Just make sure that you identify what your signal chart's going to be that you're going to take your trades off of, as well as an anchor chart, which is going to be anywhere from maybe 5 times the time frame to as much as 25 times, like in this example, intraday. Usually the shorter time that you're going to use for the entry signal here, or the signal chart, the larger that you want your anchor chart, so that you're not seeing too many false positives. Okay, that's it for tonight's report. Hope that helps, and good luck tomorrow. Take care.